everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at the markets that we have today, our big six markets, and we formulate an attack method for tomorrow's trading with the information that they're giving us today. Now, the overall movement today was relatively muted. We did get some nice kind of explosive moves, but then they quickly died off, and that kind of like start and go kind of movement, it can be kind of a pain sometimes if you're not ready to sit through it and wait, 3 hours for a profit target to get hit. So that's kind of what we're dealing with today, a little bit of a range-bound sentiment overall, and you kind of expect that. The weather's been really nice, there's not a ton of news this week, and overall, yeah, well, there's not much going on. So early in, early out, and traders may be sleeping in a little bit. Now, before we jump into the charts, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to sign you up for our email list, so you know every single time we have this video released. Along with that, we talk about different stocks that we're taking a look at that day. We also talk about different statistics and cryptocurrencies and all kinds of fun stuff. So a great newsletter to get your hands on if you haven't done so already. Along with that, at the bottom of the page in the blog post section, every single day we post not only a live trader morning prep level blog post, and that's going to go over all of the major levels of support and resistance that day, but we also post an afternoon video that goes over either a trade from that day that we took or the psychology of a specific market, so we can rip it apart and learn as much as possible. If you haven't done so already, make sure to go over to the live trader subscription and trial info, sign up for a one-day trial and see what we're all about. If you really enjoy it, you can always sign up for a weekly or monthly option, and of course, if you join as a full-fledged VIP member, you get the live trade room as part of the package, so you don't have to worry about spending anything ever again. Now, overall, the bond, again, we're mostly range-bound today. We really didn't accomplish a whole lot. And if we zoom out in the bigger picture, we're fading off of the highs of the earlier range that we've been really in since the 8th, arguably since the 5th. We haven't really left this area. Now, if we draw across, we can see one kind of area of interest, right? We have that possible top of resistance coming across here to here to here. They use it as a little bit of support, and now we are bouncing off of that again. So this zone is a big bouncing area for buyers to try to jump in on. If we go from the bottom across, we can see that they kind of broke through that area of support. So we kind of have what we would, I guess, consider an hourglass. We had the original range, and now we're breaking through to this side and using it as support and resistance. So an area of interest would be a bounce back up towards the highs. And again, going with the overall sentiment of the market, generally we want to try to form a bias, and the bias is arguably down over the past couple months. So we're looking for more of a bear tone. We're fading off of the highs of a range, so we're looking for continued selling pressure, and that means that we're looking for, in a range, better entry prices. We're nearing one right now at 160.59, but we may be able to get a little more out of this. At monthly resistance, 64. A little bit higher above that at 60-minute resistance at 67. And if they really want to start pulling back, the last line of defense for the sellers, 160.80, to drive that market back down to the lows. Now, one little kink in the hose for the downside, we have an unfilled weekend gap. We gapped down from Friday. They never filled that gap today. They came close, but it still remains open. And as long as that remains open, that's going to have a little bit of a gravitational pull on the market to try to yank it back to fill that area. So in all honesty, if the sellers are going to take it lower, it would be better for them to fill the gap to get it out of the way, and then they can roll over and complete the move down. But for right now, looking to sell at the areas that we just talked about for, the higher the better in this case, just because of the range environment. On the euro really broke away today. We had a lot of upside potential here on the euro, especially if you came in early enough. The European the European traders had all the fun again. We came into the US session and it really didn't get a whole lot more in terms of continuation. Got one good leg, and then we just kind of fell apart and went sideways, range bound, not really much going on. So if you woke up early enough, you had a really nice shot at the euro to catch a pretty big run. But for us in the US session, we had to deal with mostly a range today, and a little bit of pullback. So with this pullback, we're balancing off at a major area of support at 98.50 and finding a good chunk of support there, rallying higher. We're also coming in and forming a new wedge bottom, and we're challenging the wedge top. Now, I say challenging because we have had several probes of that area, and so far none of them have really solidified a breakout. The overall sentiment is definitely up. The buyers have a huge bias on this. It's just a matter of when do they want to break out. What I would really like to see is a trap low, dip underneath that wedge bottom, basically to trap in a bunch of sellers and then shove it right back down their throats and pound that new high. But we may not be able to get that depending on how aggressive we stay up here. We're running out of room in this wedge, so there's not a whole lot of time left. But if we can get a little bit of a pullback, I would love to see them dip down to that 851 area again, 820s, if they give it to you, right? I mean, at the earliest, you may be able to find a pullback down to 99.10, but that may be all they give you, depending on the time frame on this wedge, which, again, we're running out of time. So, overall, still heavy buy-side weighted. We're looking for a buy-side breakout. It's just a matter of whether or not they want to trap the sellers in first. So, looking for a buy, preferably at a better price if the market gives it to us. Over on gold, we had, a lot of movement, but not a whole lot accomplished. We had a lot of that last week, but we had the same thing today as well. We opened up here, and we closed here, and that means that our daily candle is pretty bearish, right? Lots and lots of wick at the highs, not a whole lot of wick at the bottom, and even though there wasn't a whole lot accomplished, still, the bears kind of did more work than the bulls. Now that said, this is still a bullish daily candle. This is going to be closing green, or white, I guess in this case. So with that bull daily candle, although this is fairly bearish in terms of the rejection at the highs, we have to be paying attention to the fact that the sellers still held, the highs. The buyers still closed it bullish, so they fought back a little bit towards the end of the day here. All things considered, for the most part, it's mostly just a range. Lots of upside potential, and the buyers do have the overall weight in the bigger picture. Would be looking for maybe a deeper pullback that could get kind of the buyers juiced up to get some of these buy moves in. And we can see if we draw this up as a channel, mostly what we had today was just a failure at the highs, and they drop back down. Now, this could just be narrowing out to a slightly more aggressive bull channel, but they're not really showing any respect down here other than some breakthrough movement and kind of holding. So, in all honesty, a deeper pullback would make a lot of sense. I would love to see them dip down to 29.4 to 28.4, but even better if they can get down to that 26.9 back from Friday. We had a lot of failure movement down there. The sellers just over and over and over and over again failed. And even a retest of Sunday failed there as well. So a dip down to 26.9 or below would be beautiful. May not be able to get that far down in the preemptive buy stage. Looking for 29.4 to 28.4. Upside objectives are going to be at weekly resistance at 36.9. So it just depends on how far the gold market wants to give you in terms of a pullback. Now, switching gears over to the bonds kind of had a nice bear trend, I guess, for the bonds. Nice bear trend. In any other market, this would be horrendous, but the bonds have been very slow lately, and this is a pretty good bearish trend working its way down. We have yet to really test the highs of this channel, drawing up the lows from low to low to low. Perfect tests across the bottom, dragging it up to the top. We have yet to procure a test. So basically what I'm looking for here is either a test of the channel highs, or if we can get a breakout above, trap that prior swing high, and get a test of 60-minute resistance right around that 151.16 area would be a phenomenal shorting opportunity for the overnight session to get those lows back in play. The one issue that we really have to concern ourselves with is we're battling over weekly and monthly opens and closes. We have the weekly open and close right here at 151.17 and 18, and we have the monthly open and close at 151.07 and 06, and we're just kind of dueling levels right now. We have weekly support and resistance and monthly support and resistance kind of in a fist fight with one another. It's not a good situation to be in for the bonds. They're already slow enough, let alone adding this on top of it. That could cause a little bit of a struggle for tomorrow. Generally, we want to have an overall bias in which route we're going, and so far we have a slight bearish tone still. This is a nice correction to the upside, but they gave quite a bit of that back. You can see the amount of failures at the highs, and with that lower high dip down, sellers are attempting, at least, to gain some control back. So I would love to see the sellers take back over, but right now, arguably, it's not quite enough proof that the sellers are taking over. So I'm going to be treating this as a range going into tomorrow, buying low, selling high, with an emphasis on selling high and looking for those traps above with higher probability. Over on crude oil, we had a beautiful drop to the downside at the end of the day, but that wasn't before we had a huge rally to the upside on this big breakout move, and basically midnight, a little bit before midnight Eastern time, had a massive spike higher. They went range bound for a good few hours and then popped back up again and continued that rally on into the US session. Once the US session happened, we started off with a counter trend move down, and we're still in that counter trend pullback. A lot of buyers, longer term buyers, are going to be loving everything about this area for a longer term buy, and we're talking holding on for maybe a day, maybe a couple days, looking for that bullish rally back up. 48.77 is that longer term buy area, 48.77 down to 56, and if they really want to pull back far, you also have 26 underneath that. At this point in time, for the short-term traders, though, we have a bear wedge that is still intact. It hasn't broken. We have no reason to be a buyer on the shorter term. So in the short term, we're looking for selling opportunities. And it may feel kind of weird, given the overall bias is definitely still strong to the upside. But until the buyers show up to the party, it's hard to give them the benefit of the doubt. So right now, looking for a retrace back into probably around that 49.04 to 05 area looks the best for selling. And we're really just looking to kind of convert this into a range. I'm not looking for this to break down 1,000 ticks or anything like that. Just looking for this to convert into a range, which eventually will likely break out to the upside. But until then, we're looking to play it as a range. Buy low, sell high. Once we start getting proof, especially tests of 49.04 would be a really nice area to look to sell. I would still rather be a buyer in the bigger picture, and that's going to be hard to ignore with crude oil just ripping to the upside here. So I would love to see a dip down and for those buy areas and maybe hang on for tomorrow to see what they want to do. And then finally, the S&P, mostly a rally to the upside, good continuation to the upside, everything pointing higher, and with a little bit of kind of a flag pullback, a little bit of a wedge, depending on how you draw it. And this wedge attempted to break out of the highs, got a double top, and arguably, if you zoom in close enough, 1, 2, 3, 4, 5 top. So a quintuple top at 24.01, and then they faded back down to the wedge bottom. This could be really considered kind of a failed breakout, right? And with a failed breakout, the anticipation is that they're going to attempt to break out the other side, and that means that breaking down would make some sense here. And in all honesty, given the upward momentum that we have, I wouldn't mind a downside breakout so I can buy at a better price. 23.97, 95.5, 94.5, anywhere down here, especially around 94.5, given that monthly support is at 94 3/4. Nice areas to become buyers inside of, and we may just get that little dip in the overnight session to finish the job off. So overall, it does look as though we're relatively bearish, but it seems to be short-lived. The buyers fail to break out on the highs, likely to trap in sellers underneath the low to then continue the trend back to the upside. So I'm looking for buying opportunities around 97 all the way down to 94.5 to get that rally into the end of the day towards the highs. So that's going to do it for the outlook. Looking at the movement that's expected for tomorrow, we have a little bit of news to worry about. Not a ton, but we do have some news to keep our eyes on. Now, tomorrow at 4:30 in the morning Eastern Time out of the UK, we have the CPI year-over-year forecast 2.6%. Previous was 2.3%. Out of the Euro, specifically Germany, at 5 o'clock, we have the German ZEW, economic sentiment forecasted at 22. Previous was 19.5. And then the only announcement for the U.S. is going to be the building permits for April, and that's forecasted at 1.270 million. Previous was 1.260 million. And that's it, right? That's all the news that we have for tomorrow, which means that it could be a little bit of a mess tomorrow once again, but at least we've got some news to keep things going. Fingers crossed for a little bit better price action, though. It wouldn't hurt anything, that's for sure. I did hear some rumblings about President Trump potentially speaking tomorrow as well, so keep your eyes on the calendar. That may be updated with some of those speech talks or maybe just a meeting. I kind of caught the back end of the news announcement, but just a heads up for you. I did hear some rumblings at least about Trump speaking tomorrow, so keep your eyes on that calendar. That's going to do it for this one, though. As always, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all.